Okay, one trend everybody has been talking about for so long is artificial intelligence. You hardly hear a firm speak today without reference to AI. On this episode, I'm going to give you my thoughts on why I think AI is a big deal and how you can invest in this fast-moving trend. I'm also going to be talking about Tesla. Tesla had their Robotaxi event last week, an event that many people saw as disappointing. I'm going to give you my thoughts on what I think about the event that Tesla had last week. I would also be speaking about Aradel, a firm that recently migrated from the NASD to the main board of the Nigerian Stock Exchange. I'm going to run you through what I know about this firm, and if you're interested in investing in them, I mean the initial information that you need to have about this firm. I'm also going to speak on the DMO's latest bond calendar. DMO came out with their bond calendar last week. Welcome to a brand new episode of Market Tape. This is the show you want to start your week with if you are interested in keeping up to date with not just the Nigerian capital market, but just the overall global capital market. You also use this show to take your investing game to a whole new level if you keep up with this show on a weekly basis. I do this every Monday. Be sure not to miss any of these shows as it drops every Monday. Make sure you subscribe and activate the notification button so you get to know when every episode drops. As I always do before I start the show, nothing said on this show should be construed as an investment advice. This show is for information purpose only, and you want to be sure that you are taking into account the risk involved in investing before you put any of my insights to use. So let's get to the business for today: AI, artificial intelligence. The idea that machines will mimic humans or even outperform humans has been around with us for a very long time. In fact, it's been just in the realm of possibilities. It has not had anything concrete to it for a long time until the emergence of OpenAI in November 2022, when they launched ChatGPT. Since then, AI has swept every industry like a hurricane, be it healthcare, manufacturing, finance, education. AI has become a big deal today. And for me, what I think makes AI so special is the fact that it improves efficiency in every industry, every sector that it is touching. It just makes everything better. It makes you better at what you do. If you think about your doctor, now with AI today, your doctor has access to a whole lot of information about you, both the ones for healthcare systems that have integrated AI, your doctor would have access to practically everything about you, all your data, whether with that hospital or with medical facilities elsewhere. And AI would be able to piece together all information about you, and then with that, your doctor will be able to make appropriate diagnosis or decisions with you regarding what you are visiting the doctor about. In fact, my colleague was sharing with me today. She asked AI to roast her, and AI came up with everything about her on ChatGPT. She asked ChatGPT to roast her, and ChatGPT gave her the story of her life, what she studied and how she had left what she studied and moved into finance. So the amount of information that we have out there, whether about us, about our financial transactions, about our health information, is a whole lot. So what AI is doing is to pull all of these informations together and make it useful for different industries, different sectors. And I think that is why AI has become like a very big deal for almost every industry. In fact, a study by Gartner indicated that by 2025, 70% of organizations would have operationalized artificial intelligence, and those who don't will be left behind. So it's not like this trend is giving any industry, any firm, the option of whether you want to use it or not to use it. It's a trend that is sweeping. It's going to make everybody better. And if as a firm you don't use it, you are going to be worse off than everyone else and you'll be left behind. You're going to lose market share if you operate in an industry. You're going to lose market share. So this is why this trend has become very, 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 very important for economies, for governments, for businesses. There was a study that AI will potentially, the industry as a whole, by 2030 will reach, depending on who you are speaking with, between $1 trillion to $15 trillion. So the bearish estimate is that AI will get to $1 trillion by 2030. And the bullish estimate is somewhere around $15 trillion. And that is a lot of money. So you'll be wondering, how do you invest in this trend? How do you take advantage of this trend in terms of investing? And it's really going to be difficult because you think about the last revolution we had, so to speak, the internet revolution. You know, it changed the way we do things today. You know, how businesses operate today is far different from how they operated in 1995. So there's a lot of transformation. But certainly not every company, not every business saw significant growth in their revenue as a result of the internet revolution. You can point to the guys like Amazon, Microsoft, Apple, Google, and the likes, and you can point to them and say these guys benefited a lot from the internet revolution. So in the same vein, it's not every firm that is going to have their revenue grow astronomically as we've seen with NVIDIA, Palantir, and the likes. It's not every company that will have such significant growth in revenue. So the real work in terms of investing in this trend will be identifying those firms that will see their revenue grow significantly as a result of this trend. And what I've done is to break it down to different sectors where I think we're going to see initial growth in revenue as far as AI is concerned. And these sectors, some are self-evident. We've seen how AI has impacted hardware firms, particularly semiconductor firms like NVIDIA, Taiwan Semiconductor, Advanced Micro Devices, and the likes. We've seen significant growth in their revenue over the past 1-2 years as a result of artificial intelligence. But I also expect AI to impact other sectors like cybersecurity, data center firms, the guys who provide energy. You know, the thing about these data centers is that they use a high amount of energy. So demand for energy is going to be a lot higher than it was before AI. And then, of course, the cloud computing firms. So I'm going to touch a bit about some of these firms. So you could look at cybersecurity in the sense that as you deal with all these large amounts of data, firms need to have access to this data to process them and use them into decision making. As you navigate this, you're going to have to deal with increased cyber attacks. You know, there are actors out there who are going to want to have access to these data centers and use whatever they find there for their own gains, of course. So the cybersecurity firms will have to be on top of their game. You know, many of them are adopting AI today, the likes of Palo Alto Network, CrowdStrike, and of course Palantir. Palantir is not exactly a cybersecurity firm, but they help companies analyze data, and then analyze this data and summarize them into very useful tools that firms, governments, businesses can use for decision making. So they also have that exposure to non-state actors who may want to have access to this amount of information. If you look at the top 10 performing stocks on the S&P 500 for last week, you had Palo Alto was there, Palantir. They were the top 10 performing firms on the S&P 500 for last week. You also have CrowdStrike. Of course, we can't forget the outage that impacted on them about 2 months back, that exposed so many Fortune 500 firms. They seem to have bounced back from that. Year to date, CrowdStrike is up 25.4%. But the biggest move among these firms, of course, is Palantir Technologies. That's added 153% year to date. A lot of people will look at the current share price, which is around $43 per share, and think it's overvalued. But the thing with most of these AI firms is that most of the valuations is based on expectations, forward expectations. And with Palantir, there's a lot of most analysts don't have so much information about the firm, or information and understanding about the nature of the business of the firm, because most of their businesses, a large amount, I think around 40% of their businesses reside with governments. And with these government businesses, there's you don't have so much of information in terms of transparency on what is going on between them and these government agencies, both the US government and European governments, that they help analyze a high amount of data. So there's a lot of opportunity in the cybersecurity space. Not just these 3 names, but there are a lot of cybersecurity firms that are integrating AI and using that to serve firms, enterprise cybersecurity systems. So I think there are a lot of opportunities in that space. Then, of course, the hardware and infrastructure. This is where you have most of the players that are currently making waves today, the likes of Amazon, Microsoft, Alphabet, and even Facebook. Facebook is building its own data center for training AI models. So there's a lot of opportunity in this space in terms of the hardware and infrastructure space. Of course, because AI thrives on advanced technology, advanced chips, So, and this is where NVIDIA has distinguished itself just by the efficiency of the chips they have built for this technology. So NVIDIA is miles apart, when you compare them with the likes of AMD and other semiconductor firms. So NVIDIA is miles apart. But one firm that I think gets lost in this whole discussion about artificial intelligence and semiconductors is Taiwan Semiconductors. They produce over 50% of the semiconductors that we use globally. They produce for the likes of AMD, NVIDIA, Apple, and almost all the big chip companies. They have their production by Taiwan Semiconductors. And I don't think the firm has gotten this sort of love, if you use that word, from the market, the kind of love that NVIDIA gets and some of these other names. Then of course Amazon, Microsoft, and Google. I think these 3 firms, I believe they still have a lot of rooms to run in terms of artificial intelligence, because they are the 3 leading names when it comes to cloud computing. And as this trend continues to grow, as the market share continues to expand, you expect that to impact on the revenue of these 3 firms that control the whole cloud computing space. Overall, if you are looking at the overall AI trend, to me, you want to stay with these guys who are building the infrastructure. It's uncertain the businesses that are going to win in terms of the application of AI. It's something that would impact the market generally. It's going to impact almost every business, every industry, every economy, but ultimately it comes down to how much impact is it going to have on specific firms, on specific industries. And what I'm looking at today is the fact that it's going to have, it's uncertain really, the sort of impact it's going to have. If you take the healthcare industry, for example, it's going to impact almost every firm in that industry. But which firm wins the race, which firm would distinguish itself in terms of increasing its market share in that industry is uncertain. And because of this uncertainty, I would rather stick with the guys building the infrastructure. You know what they say about the saying that in a gold race, sell picks and shovels. So these guys are the guys basically selling the picks and shovels in the AI race, and you want to, use them as your first instance when it comes to investing in artificial intelligence. Okay, so to the other event we had last week, the Tesla Robotaxi Event, where Elon Musk showcased Tesla's latest technologies. One of them is the Optimus humanoid robot, a robot that can basically do a couple of stuff for you, serve you wine. I didn't get to see, one thing I was expecting these robots to be able to do is to cook for you. I don't think I saw that, but it was a very interesting event. They also showcased the Tesla cyber cabs, a cab that would drive itself without the interference of a human. So what they call autonomous driving, which was supposed to be the main point of that event, and then of course the robovan, bigger autonomous cars. So Tesla showcased all of this stuff, but what really stuck out for a lot of people is the cyber cab, because for long, this event had been postponed for either 2 or 3 times. The first time they were not ready, second time they were not ready, and finally we got to see these self-driving cars, these self-driving taxis, and it was really beautiful. It was really, really beautiful. But when it comes to the market, it goes beyond the excitement. It goes beyond the excitement of the beauty of the cars. Now, the question is, when will Tesla roll out these vehicles? When will these vehicles hit the market? And it's not really easy to, send these self-driving cars out. There are a lot of curves that the company will need to navigate in terms of what would regulation do with these vehicles. Even for a country that is as advanced as the United States, you're not just going to send out self-driving cars into the street. There are issues that the government will need to look at and then give approvals. And Tesla did not provide any indication that they had gotten approval to roll out these vehicles. And I'll bet to say that they don't have that approvals yet. They don't have those approvals yet because, of course, the government has to look at safety. I was wondering what happens if there is a cyber attack. Let's say an attacker takes control of Tesla's data centers and then starts to interfere with the operations of these self-driving vehicles. You can imagine the amount of chaos that you have if this car suddenly got under the control of a negative party. What sort of impact is it going to have? We saw weeks ago how the Israeli Mossad was able to bomb pagers and walkie-talkies of Hezbollah fighters in Lebanon. So there are possibilities that hackers could interfere, could take control of these systems, and then lead to undesirable situations. So there's a whole lot of curve that Tesla needs to navigate before these cars get rolled out. And but of course, if they're able to successfully launch these vehicles, it's going to have a significant impact in the cab hailing business. But just beyond taxis, it means also now that you could have a Tesla vehicle and that drives itself. And if for any reason you're not using the vehicle at a particular point in time, you could send it into the cab hailing fleet, and the vehicle is going to work for you, and you earn money off that. So it's a very fascinating possibility we have looking into the future. But there's a lot of uncertainty that comes with this. Uncertainty in terms of regulation, uncertainty in terms of how the market welcomes this idea. But personally, one thing I was looking forward to about this event was to see more clarity regarding Tesla rolling out cheaper electric vehicles. They have this Model 3 vehicle that is their bestseller, but the price of the Model 3 is still way above what most people can afford, even in a country like the US, not to talk of a country like Nigeria. So I was half expecting to see some clarity as to when the Tesla is going to roll out these cheaper electric vehicles, at least the ones that we can drive ourselves, not the robo cars or autonomous cars. But the company was very silent on that, and I think that was the main reason why the market saw it as very disappointing, and the share price of Tesla tanked about 8% for the week. But with Elon Musk, he's the richest man in the world, obviously, and it's difficult to bet against him. This is a guy who has landed rockets in space, and then he's done some incredible stuff. It's only Elon Musk that can tell us he's going to roll out self-driving taxis in 2026, and anyone will listen to that. But the market wanted better as far as clarity is concerned. Clarity in terms of regulatory approval for the autonomous cars, and then the rollout of cheaper models of Tesla's EVs. Because if you look at the price of Tesla as a firm, the price of Tesla is basically based on the valuation is based on forward expectations we have about future sale of cars, expectation around the Robotaxi and the launch of it. But we didn't get clarity regarding that. Last week Tesla lost I think almost 80 billion in valuation. And what Tesla lost in valuation is a combined valuation of Ford and GM Motors. So it tells you how much forward looking the current valuation of Tesla is. So we want to see more concrete stories around this firm. But obviously, so if you are invested in Tesla, you want to evaluate this situation, and see what you want to do going forward. For me, I wouldn't say I will sell my Tesla shares. I won't say that. So if you're a believer in Musk, if you have the risk appetite to hang around with this firm for the next 5 years, then you may want to see the current loss in market valuation as an opportunity to buy more, maybe. But if the timeline of the firm does not sit well with you in terms of your risk appetite, then you may want to reconsider whether you want to continue holding this position. Because what I see with Tesla going forward is volatility. This stock has been very volatile, and I don't think the next 2 to 3 years will be any different. We're going to see a lot of volatility in terms of the share price. You're going to see it go up on one news and then go down on another news. So you want to look at what your risk appetite is, what your risk thresholds are to warrant whether you want to buy or sell this particular one, Tesla. Now, coming back home, today we will see the listing of one of the foremost indigenous players in the Nigerian midstream, upstream, and downstream oil and gas sector, a firm called Aradel. This firm will be listed on the NGX at 702.6 naira per share, 702 naira 69 kobo per share, and to be listing 4.3 million shares by introduction. What this means is that the company is not raising fresh funds. This company has been around for a while. It was listed on the NASD before now. So the company is only migrating from the NASD to the main board of the Nigerian Stock Exchange. This company is an exciting company because by virtue of this listing, this company will be catapulted into the NGX 30, which is an exclusive collection of the top 30 stocks in the Nigerian Stock Exchange. So as soon as this company is listed, it's going to go into that exclusive list with a market capitalization of about 3 trillion naira. This company has about 3 oil mining leagues, the OML 54, OML 53, and OML 34. It also has the OPL 227. The company also participates in modular refining of AGO, MDO, that is marine diesel oil. Yeah, it also refines kerosene and naphtha. It has a combined refining capacity of about 11,000 barrels per day. I did look at the company's financials over this weekend, and I was a bit impressed with what I saw. It has a very healthy free cash flow. As at the end of 2023, the free cash flow stood at about 90 billion naira. I think it's currently at around, based on their half-year results, it should be around 155 billion naira, their free cash flow. And obviously, I make a lot of big deal from companies that have high amounts of free cash flow. Impressive liquidity and debt ratios, and good profitability margin. The operating margin is around 51.58%. As at the end of 2023, EBITDA margin 58.49%. And the company has also seen a strong growth in revenue. Revenue grew from 66 billion in 2022 to 221 billion at the end of 2023. This company generates a lot of its cash flow in dollars, obviously because they are in the upstream sector of the oil and gas industry. So they generated a lot of revenue in dollars, like Seplat Petroleum, And then if you look at the dividend history, this company has been paying dividends for the past 17 years, And the dividend has been growing. That is the impressive thing about this firm. They've had a decent growth in dividend. Obviously, they paid 200 naira per share in 2023, which is about 85% payout ratio. I don't think this is an expectation that one should have. A company trading at 700 and something naira paying a dividend of 200 naira per share. I don't think this can be sustained. So if you are looking at this, don't expect this to happen every year. Because if you look at the history from 2013 to 2022, there was a significant jump in dividend payout from 35 naira in 2022 to 200 in 2023. 2023. Obviously, I have to look at why they had this significant jump, but I don't think it's something that will be sustained in the years ahead. But certainly it is a company that has performed decently in terms of the sort of financial metrics that I look at when I'm evaluating a firm. Very impressive. So this company will be listing today on the stock exchange. Again, if you're looking at the investing in the oil and gas sector, this sector, despite all of this, has a high dependency on the price of crude oil. And as you well know, price of crude oil is very volatile. Crude oil price goes wherever geopolitics goes wherever all these other factors that impact on oil price goes, whether it's climate, whether it's weather, whether it's external shocks, whether it's geopolitics. For instance, the ongoing conflict between Israel and Iran has in a way kept oil price above 70 barrel per dollar for a while now. So you could see oversupply in that market. If suddenly we resolve all of these conflicts and then you see weaker economic growth, it could lead to lower demand in overall demand for crude, which definitely would impact a firm that is invested in the oil and gas sector. So just so you know that this firm, the fortunes of this firm will go wherever the fortunes of the crude oil price goes ultimately. So just something to keep in mind to help you evaluate whether you want to invest at 702 naira, 702.69 naira, to evaluate whether you want to invest at that price. I can't really say based on the amount of information I have so far. In the next couple of days, I'll try to do a valuation of this company and come up with my own fair price estimate, which I will disclose once that valuation is completed. I will disclose that. So, but overall, is a firm I want to keep an eye on and track as it gets listed, and I'll see what happens in the coming days, how the market reacts to the listing of this firm. And then moving on to Ecobank. 2 weeks ago, I did speak about, I did speak of Ecobank issuing a dollar-denominated note in the 5 years maturity. That note will be listed today also at 10.125%. It is a bond that will pay coupon semi-annually and is for 5 years. Ecobank raised $400 million at 10.125%. And this particular note will mature on 15th October 2029. Currently, Ecobank also has other notes in the 2026 and 2031 maturities. The 2031 particularly has been trading at a premium. It's been trading at a high premium. But with the sale of this note, which has a maturity that is closer to the 2031 maturity, we started to see more supply in the 2031, which sent the price crashing from almost $116 to about 101 to close the week on Friday. So something to keep an eye on if you're invested in any of these notes issued by Ecobank. Price is a function of supply. Now that you have more supply in terms of the amount of bonds issued by Ecobank, the prices for the existing Euro bonds have all come down significantly. So just something to keep your eye on. And then in terms of options for investors who would see 2031 as too long and 2026 as too short for them, and this is another option that we would look at investing in. Then moving on again, we had the DMO release its bond bond calendar for the fourth quarter of 2024, and kind of surprised everyone, removing the 2033 bond from the calendar, leaving out only the 2031 and 2029 bonds. You know, the 2031 has a coupon of 18.5, and then 2029 has a coupon rate of 19.3. The 2031 has about 1.3 trillion outstanding, and the 2029 has just 211 billion already issued by DMO. So with the release of this calendar, we suddenly saw significant supply in these two maturities, sending their yields trending upwards last week. The 2029 closed at 19.3% last week, and the 2031 closed at 21.3% for the week. Those were the two bonds that were significantly trending upwards last week. The 2033, which has been on the calendar for a while now, kind of moderated for the week. But based on the current liquidity level, I expect that bond yields would remain elevated, at least until we start to see these coupon payments coming. And we have coupons expected on the 18th and on the 17th of this month. We also have other coupons coming, I think around 26th and 27th of October. You know, the payment of those coupons will hopefully improve market liquidity, and maybe then we'll see some of these yields moderate. But currently, the yield level remain elevated, with most of these bonds around the 10 years maturity trading close to 21% currently. The DMO will hold on that auction on Monday, next week Monday, and we'll see what happens at that auction. But I expect rates to trend a bit higher when they hold, to remain elevated at least when they hold that auction on Monday next week. Finally, before I call it a day, the earnings season started last week with JP Morgan and at least from the companies that we track, JP Morgan and Wells Fargo putting out their third quarter reports, which performed better than estimates for both JP Morgan and Wells Fargo. And so both companies saw their share price up for the week. JP Morgan was up 5.48% for last week, and Wells Fargo 6.44% for last week. This week, we're going to see a lot more companies roll out their earnings reports. The likes of Johnson & Johnson, Bank of America, United Health, Goldman Sachs, Louis Vuitton, Morgan Stanley, Abbott Laboratories, ASML, and my darling, Taiwan Semiconductors, and of course, Intuit Surgical and American Express. And I'll be back here next week to talk you through what I see with these reports as they drop. Thank you for listening. If you made it up to this point, don't forget to subscribe, and I appreciate the love. Don't let it stop coming. Till next week, bye. I am Nathan Mokoro.